So now we are going to start with illustration 4, which is given on page number 64 in your textbook. Yes. So in the previous illustration we have understood about the transactions of capital and drawings, and in illustration 4 we are going to understand, we are going to learn how to write down the transactions of assets and goods regarding the purchase of goods or purchase of assets. Yes. So let us quickly begin. Firstly, as you can see, I have prepared a format on the board. This is illustration 4. You are going to write down the heading, that journal entries in the books of so and so, the way I have instructed, and we are not going to write down narration. We are only going to understand how to write down journal entries. Yes. Okay. So firstly, I will be writing down a year 2014. Then the month, it is April, and April 1st, year, month and the date. Yes. So let me read the first transaction. Brought cash of rupees 10,000, stock of rupees 10,000 and furniture of rupees 5,000 and commenced business. So if you see cash, stock is always stock of goods, and furniture, the three of these are assets. Assets are always having debit balance, and these assets have been brought in the business for commencement of business. So anything brought in the business for commencement of business is capital. Yes. So be these assets, we are going to debit them. So firstly, cash account debit. $10,000. Then you have stock of goods. Debit, how much it is? Let me see. 10,000. Then furniture is also an asset. So furniture account debit. How much? It is 5,000. Right, then 10 plus 10, 20 plus 5, 25. So this is an investment and it is capital. Anything brought in the business for commencement of business is always capital. So it is 25,000. Alright. So this is the journal entry for commencement of business, introduction of capital, cash or in the form of an asset. Yes. Let us see the next transaction. 3rd of April it is. Goods purchased of rupees 5,000 from Mathura traders. This is credit transaction. And as I have taught, in the credit transaction, out of the two effects, one is always of the name of the person, the name of the other party. Here it is Mathura traders. Yes. And what has the owner done? Owner has purchased. So what comes in the business? Goods. You have purchased goods. Purchase, real account, debit what comes in, and hence purchase account will be debited. It is on 3rd of April. So purchase account debit. To Mathura traders account. You might be thinking, why Mathura traders has been credited? Mathura traders is a personal account, and the rule of personal account is debit the receiver, credit the giver. So we have purchased from Mathura traders, so Mathura traders is obviously a giver, and Mathura traders is also my creditor. With both these logics, Mathura traders is having a credit balance. Alright. And purchase, it is purchase of what? Purchase of goods. Goods is a part of real account. The rule of real account is debit what comes in, credit what goes out. With this application, debit what comes in, purchase account, debit. Alright? Okay then. Let us see which is the next transaction. Goods sold for cash rupees 4,000. It is on 4th of April. Goods have been sold for cash. So the two effects are going to be cash account and sales account, of course. Yes, now you just have to decide what to debit, what to credit. So here the goods have been sold. So goods goes out, credit what goes out, and you have sold it for cash. So cash comes in. So cash account debit. Debit what comes in to sales account. Let me write down the amount and date. It is on 4th of April and the amount is 4,000. Okay. Both of these are a part of real account. What is the rule of real account? It is debit what comes in, credit what goes out. Cash, debit what comes in, cash comes in, goods goes out. Alright. Next, 6th of April, goods purchased from Rishikesh of rupees 8,000 and paid an half amount in cash. This is something different and something interesting. Purchased goods from Rishikesh, paid half of the amount in cash. Goods are of rupees 8,000 and only half amount has been paid in cash. So if you want to understand it in a better way, this transaction, the transaction having economic value of 8,000 is half cash, half credit. Yes. So let us write down the journal entry. It is on 6th of April. One thing is clear, that the goods have been purchased of rupees 8,000. How much amount has been paid in cash? Half, 4,000. So cash goes out. Credit what goes out. So cash account 4,000. So this way the transaction is halfly cash transaction. That means remaining half is credit transaction. In cash transaction, one effect is of cash, another, if you are talking about credit transaction, one effect is of the name of the account of a person. So who is the person here? Rishikesh. So to Rishikesh account. This simply means I have purchased goods of rupees 8,000 from Rishikesh. Debit what comes in, of which 4,000 I have paid in cash. Credit what goes out. Rishikesh is my creditor and is also a giver, and hence his account has been credited. I am supposed to give him 4,000 still. 4 I have given. Yes, so this is a mixture of cash transaction as well as credit transaction. If you want to understand this in a better way, purchase account debit 4,000 to cash account 4,000. You have purchased goods and you have paid 4,000 in cash. Then purchase account debit 4,000 to Rishikesh account 4,000. Credit transaction. So in both the journal entries, you have debited purchase account. So instead of writing it twice, you just write it once, and this is how the combined journal entry, the concept of combined journal entry we have understood. Yeah. So that is applied here. Alright. Okay then. We'll continue. Goods of rupees 1600 returned to Mathura traders. If you remember, transaction dated 7th of April, sorry, not 7th of April, it is 3rd of April. 3rd अप्रैल पे जो ट्रांजैक्शन हमने लिखा है परचेज अकाउंट डेबिट टू मथुरा ट्रेडर्स, इट सेज दैट यू हैव परचेज्ड गुड्स फ्रॉम मथुरा ट्रेडर्स. Yes, now you have returned goods to Mathura traders of rupees 1600 on 7th of April. So let us write down the journal entry for that. Seventh of April, you have returned goods to Mathura traders. So firstly, who's the receiver? Mathura traders. So debit the receiver. Yeah. So firstly, we are going to debit Mathura traders with no doubt. Yeah. Okay. So Mathura traders account debit. Now the question is what to credit. You have returned the goods that you have purchased, that you had purchased. Yes, so purchased goods are returned, that becomes purchase return because goods are going out of the business and hence purchase return account is credited. Goods of rupees 1600 only. ठीक है? Okay. So Mathura traders account debit 1600 to purchase return account 1600. Purchase return account, how? I have explained, because you are returning the goods that you have purchased earlier. To whom? To Mathura traders. Mathura traders is receiver, debit the receiver, goods goes out because you have returned it. You have given to Mathura traders and hence purchase return account is credited. Credit what goes out. Yeah. Then the next transaction on 9th of April, goods of rupees 600 given for Prime Minister Relief Fund. This seems to be a charity. पढ़ के ही हमें मालूम पड़ता है that this is a charity. Okay. So given for Prime Minister Relief Fund, this is donation or charity. Let us check the journal entry for this. It is donation account debit to purchase account. You might be thinking that ma'am, why purchase has been credited? So I'll make you understand. Firstly, donation is an expense. Obviously, we are not charging for this. Yeah. So this is our expense. You have donated goods. Which goods that you have purchased for sale? Yeah. So donation, let me change the date. It is on 9th of April. To purchase account. Alright. Now purchase has been credited. Let me clarify this. Purchase account, basically it is always having a debit balance, but it is credited in few of the cases, which are goods withdrawn for personal use, goods given for advertisement, goods given for charity, donation. In all those cases, purchase account is always credited. Why? Because it reduces the balance of purchase. Alright. So in this type of cases, purchase account is credited. So it is credited here with 600 rupees because goods of rupees 600 have been given in Prime Minister Relief Fund, which were goods are actually purchased in the business for the purpose of selling it ahead after adding some profit, isn't it? But here you have just given it for donation. That is the reason purchase account has been credited. Yeah. Okay. Next, the transaction on 10th of April, They say electronic weight machine purchased for rupees 450. Electronic weighing machine purchased for rupees 450. This is a part of dead stock. Yes, this is a dead stock and it is having debit balance. So the journal entry for this is dead stock account debit to, and you have purchased it for cash or not, let me check. And if nothing is mentioned, it is always cash. So dead stock account debit to cash account. Alright, let us check the next journal entry. 100 shares of Shri Basra Limited purchased at rupees 30 and 2% brokerage is paid. Both the payment is made by check. So shares is an investment. Investment is an asset. Yes. So please check the journal entry in the textbook, which is, in the illustration which is given. It says share of just hold for a second. Shri Barsa Limited it is, shares of Shri Barsa Limited account debit to bank account. Why bank is written here? Let me clarify this. The transactions of shares always, they take place through bank. They never take place in the form of cash. Yes. So firstly the shares have been purchased. How many shares? 100 shares of rupees 30. And also the brokerage is paid. How much? 2%. So 3 2s are 6. So 60 rupees is the brokerage. So total amount paid for shares. Alright. And this is paid through bank. And hence bank is the giver. Bank account has been credited with this reason. Yes. So, and shares, why they are debited? Because it is an investment, it is an asset. The purchase of shares, investment, everything is always debited. So, the journal entry says share of Shri Basra Limited, Barsa Limited account debit to bank account 3060. Alright. Next. I am just going to explain the journal entries now. If only in the new journal entries, I will be writing it on the board. Yeah. Other than that, we are going to solve it orally. Next one. Transaction dated on 18th of April. Goods of rupees 4000 sold to Kedarnath. You have sold goods of rupees 4000 to Kedarnath. Who is the receiver? Kedarnath. Let me write it down. On 18th of April, Kedarnath is the receiver. Debit the receiver. Goods goes out. So this is the journal entry and goods are of rupees 4000. Okay, fine. The next transaction. Goods of rupees 500 withdrawn for, I am reading something else, 20th of April. Goods of rupees 1500 destroyed by fire. Goods of rupees 1500 destroyed by fire. Let us understand the journal entry for this. It is given on page number 66. It says loss on goods destroyed by fire account debit. Loss and expense. All the expenses and losses are always debited, and this is the reason they have written loss on goods destroyed by fire account debit 1500 to purchase account. As I said, purchase account is credited in this type of cases if goods are withdrawn for personal use purchase account is credited. If goods are given for advertisement, if goods are given for charity, donation, if goods are lost by fire, during this time, the purchase account is credited, alright, and loss is debited as per the rules of nominal account, and hence it is written here, loss on goods destroyed by fire account, debit, alright. Okay. Then the next transaction says 22nd of April, half of the goods returned back from Kedarnath. Kedarnath is a person to whom we have sold goods of rupees 4,000, and from 4,000 Kedarnath has returned to us. To us means to the owner. You just consider yourself that this is your business. Yes, who are you? You are the owner. Gokul Traders is your business. So just think that you have sold goods of rupees 4,000 to Kedarnath, and now Kedarnath on 22nd of April has returned you half of the goods. So this is sales return. So sales return account debit to Kedarnath account. Alright, on 22nd of April. Just the way we have understood about purchase return, this is sales return. If you will return to someone from whom you have purchased, it is purchase return and it is credit balance. And if someone to whom you have sold will return you goods, that is sales return, because the goods are returned from the goods that have been sold. So this becomes sales return. And who's the giver? Kedarnath. Kedarnath is giving you goods, is returning you goods. So with the rule of personal account, Kedarnath's account has been credited because Kedarnath is giver. Yeah. Next, 25th of April, goods of rupees 500 withdrawn for personal use. Anything withdrawn for personal use is always drawings. So let us write down the journal entry for that. And here goods have been withdrawn. So these are goods going out other than sales. You have not sold, but still goods are going out of the business. During that time, purchase account is to be credited. This transaction is on 25th of April. Drawings account debit to purchase account because goods have been withdrawn for personal use of rupees 500. Alright. Then the next transaction on 28th of April, furniture of rupees 3,000. Firstly, furniture is an asset. Asset is always having a debit balance. If you are purchasing an asset, you cannot write purchase account. You always have to write down the name of the asset. Yes. So there is a purchase of furniture from Bansidhar Furniture Mart. Bansidhar Furniture Mart is the giver. Yes. And as per the rule of personal account, debit the receiver and credit the giver. Yes. So Bansidhar Furniture Mart will be credited. Because this is the credit transaction and Bansidhar Furniture Mart is the giver. There is a purchase of furniture of rupees 3,000. Whenever you purchase an asset, you just have to write down the name of the asset. You cannot write purchase or sales. These two words are used only for the purchase of goods and only the purchase and sale of goods. Other than that, if you are purchasing any asset, or in case if you are selling any sort of asset, you have to write down the name of that particular asset always. Yes, here the furniture has been purchased. So, furniture comes in, debit what comes in because furniture is an asset. Asset is a part of real account. The rule of real account is debit what comes in, asset comes in. So, debit what comes in, furniture account has been debited with that logic, and it has been purchased from Bansidhar Furniture Mart. This transaction does not highlight the word paid, received or any such cash or anything like that. So, this is the credit transaction, and in the credit transaction always the name of the party is mentioned, and out of the two effects, the one effect is always about the name of the person or name of the institute. Yes. So, Bansidhar Furniture Mart is the giver and hence it has been credited. The last transaction of illustration 4, after adding 20%, after adding 20%, goods of rupees 1000 sold to Chandni. Carriage of rupees 50 paid on her behalf. Firstly, 20% of 1000 is 200. Yes, so goods are of rupees 1000. You've added 20% of profit on it. So, you have sold goods for rupees 1200. To whom? To Chandni. Further, you have paid carriage rupees 50 on her behalf. You have paid on her behalf. This is not your expense. Yes. So, overall from Chandni you are going to collect 1250, 1250, 1200 for goods and 50 rupees of carriage. Yes. So, let us check the journal entry for this. Okay. Chandni is the receiver. So, debit the receiver. And you have sold her goods and you have paid carriage. So, there are goods of rupees 1000. You've added 20% profit, making it 1200, and further there is carriage of rupees 50. Yes. So, Chandni is my debtor. She will pay me 1200 of goods and 50 of carriage. So, overall she is going to pay me, of which 1200 of goods she will pay and cash. This 50 rupees I have paid right now. So, cash goes out, which Chandni is going to pay me. She is my debtor. The reason that carriage has not been debited here is that carriage is not my expense. It is an expense of Chandni. So, we have not written carriage account debit 50 to cash. Instead, we have written only cash. That means I have paid an amount on behalf of Chandni that Chandni is going to pay me later. Chandni will write down in her books of accounts that carriage is an expense for her. Yes. So, with this we finish illustration 4. As you know, you are supposed to total both the columns of debit and credit, and the total of both the sides should be identical. Yes. So, we are done with the illustration 4, and you will practice this. Also in the previous to this we have done illustration 3. Even that you are supposed to practice. You are supposed to read narration, and this way you will be habituated with this. Alright then, we will finish this lecture here, and we will see you all soon in the next lecture.